Hey guys, what's up? Alec back with the daily stock market, and today we are down about $200, only 0.5%, but that's okay because in the last month we are up considerably. Last week we're still up 9%, last 3 months we're up 18%, last year we're up 84%. So we're having a little bit more of a choppy day in the stock market today. And just to do a quick recap, we have Facebook up to $308 at an all-time high currently. We're up pretty nice on that, over 52%. Apple, here we have 2% gain, and I'm up over $186 on Apple. Have a nice big position. XPEV is down 2.8%. Tesla's up almost 5%. This is about midday I'm filming this, so things can be changing by the time you're watching this video, keep in mind. Tattoo Chef up 3.3%. Neo is down almost 1%. Walgreens is up 4%, and I'm up 27% total on that one. But let's get right into the video. The main part of the video is going to be the 5 more stocks to talk about and 5 more stocks to have on your watch list for this week. So this is the 3rd day in a row that we've done a 5 stock watch list. So if you appreciate that, smash a thumbs up before the video even starts and leave a comment below also. Okay, so the first one we have to talk about is Moderna, mRNA. It's a vaccine stock, obviously down 2% in the day, up 5% in the week. Still in the last 3 months, it's up 21%, which is a good look. And the last year, we're up 271%. As you can see, it's been very choppy here. It's been going up and down, up and down. It looks like it's down right now. So I think that right around 125 to 130 is a great place to buy Moderna if you're looking at a long-term growth projection, because we have the vaccines are going to be huge in the next 1 to 2 years. And I think already, what was it, about 1/3 or 1/5 of the population in America has already got the vaccines, right? So that's going to reflect on their next earnings. And I think they can easily go back to about $150, $160 stock. This one's obviously a little bit more risky than the other ones, because there's no guarantee that Moderna is going to be the vaccine of choice. You know, Pfizer can beat them out, one of the other people can beat them out, or they can become obsolete compared to some of the other ones, making a name for itself too. So make sure you weigh out the options, but I think that this has great swing trade potential, longer swing trade. So if you're going to be holding for like 3 to 6 months, this could be the stock for you. I have about $400 in this one, and we're up 6% total so far. Next one on the list that we're talking about today is JMIA, Jumia Technologies, and down 4% in the day. In the last week, they're up 10%. And in the last 3 months, they're still down 8%, with them being up 64% at one point and then dropping and losing all that steam in the matter of just a few weeks. So this one's definitely a more volatile one, so be prepared if you are going to be getting in this one. But it looks like a common support is right around the $30 mark, $33 mark, where it's currently trading at right now. I would say that this is a great growth stock, and if you don't know about them, they're kind of like the Amazon of Africa, and I think Africa is going to keep expanding. And Africa is a very, very big hub of the world. People don't even realize, and I think their technology is going to catch up. So if you want an international company and you want to get in more towards the bottom, and if things go as planned, this one can have some extreme growth in the future and easily get back to $60, $70, even $100 a share in the future if they keep expanding. So this is one that you might want to do some of your own research on. There's actually a lot of good videos doing a deep dive on Jumia. So I won't do the deep dive because there's already a lot of those videos out there. All right, the third stock on the list that is going to be ULCC Frontier Group. This is the airlines, Frontier, if you know them. It just IPO'd pretty recently, this month actually. I usually don't put these on the list, but I think it's a good one to talk about because the market cap is only $3.8 billion. And I would want to definitely do a deeper dive on this one and look at like the income statements, the balance sheet, to see how much they can compare to some of the other airlines. This could be a good one to compare against JetBlue. I think JetBlue's market cap is like $5 billion, so it's right around Frontier's. But we would want to look at the numbers and see if Frontier has as much revenue as JetBlue, has much income, net income as JetBlue, has much flights and passengers, JetBlue. So it'd be interesting to do a deep dive and compare this one to JetBlue, Frontier to JetBlue, to actually see if they are valued properly at that $3.8 billion market cap. Because if we go over to JetBlue, just to confirm, Jets, that's a good ETF. JetBlue Airways, they have a $6.8 billion market cap, right? And their EPS is negative, so they've actually haven't been earning net income. So it'd be interesting to see Frontier, maybe their positive earnings or their revenues better than JetBlue, which would be able to justify buying them. So just to be clear, I'm not buying Frontier Group yet, but they're an interesting stock to look at and compare against some of the others, and also see how their stock price stabilizes in the coming months, and what happens if they go to $40 a share, if they go to $15 a share, $12 a share. So they're definitely one to at least have on your watch list. Do a little bit more research about them and realize that they are an IPO that just came on the market on April 1st. And I know a lot of you guys like IPOs, so that's why it made the list. But personally, for me to buy in this one, I have to do some more research comparing it to JetBlue and some of the other airliners. Now, the fourth one to make the list is AYX, and I posted this on my story if you follow me on Instagram, so we'll dive into that in a little bit. But it's also at a current support that it hasn't hit in the last 2 years, right? It was at $84, $80 at the last 2 years, and it's been following this support pretty closely for the last 2 years. So here you'll see it hit again. It hit a third time here, about a fourth time, fifth time, and now it's really at the bottom support. So I think it can be a great time to buy them. We're actually going to do a quick dive into their balance sheet and income statement just to take a peek at it. Their market cap is $5.3 billion, so they are a bigger company, which is good. And they have been beating earnings consistently, as you can see right here. So here we have AYX pulled up. It looks like their income statement is pretty choppy when it comes to their net income. They were up 27 million, which is not that much of generating a profit, and now they're down 24 million. But this is where they really shine, is the revenue growth. So they're a huge revenue growth machine. They're going to be a growth stock that's a little bit more risky. It offers more risk, but it offers more reward, because look at that growth they've had. 59%, 53%, 92%, 64%, 18%. They've been growing consistently double digits every single year for the last 5 years. Their balance sheet isn't the greatest thing in the world, but it is getting better, adding more assets. And they've also been adding more liabilities also, but their asset to liability is 67%, which isn't the worst. But if you guys know me, I like it closer to 30% on the liabilities to assets. I want to have at least 3 times as much assets than liabilities. And this doesn't even have 2 times as much. Now, what originally got my attention about AYX is this article here. It was saying that it crashed 50% since summer. Revenue growth came to a screeching halt last quarter, but ARR growth remains strong. But the growth on the revenue, the annual revenue growth, remains strong. AYX has a solid balance sheet with $7,500 million in cash, which I kind of disagree. It doesn't have the best balance sheet in the world, but the $75 million in cash is a great thing. This analyst rated shares with a buy potential of 56% upside, which I can agree with. I can see this stock going back to about $115, $130 a share, which would be some huge growth potential. But overall, I would say that this one's a little bit more risky. It's in the category of like a high risk, high reward growth stock. I don't think it could go that much lower. It's at a common support right now. It has some great upside potential. So overall, it is a good one. But remember, there is a little bit of risk going on. So don't load the boat with this one. But it might be a good one to add to your portfolio and supplement it, especially if you see that your portfolio has a lot of safe stocks and you want to go a little bit more risky on the growth side of things. This might be the stock for you. And the last one to talk about is HIMS, Hims and Hers Health, a disruptive healthcare industry provider. This is going to be a long-term hold. A lot of people are expecting short-term gains out of this. They're up 13% in the last week, but in the last month, they've been pretty choppy. going up 14% and then falling. Same thing in the last 3 months. They even went up 58% on February 8th and then fell again. So this is one of those very choppy stocks. It's a high risk growth stock, kind of like the last one we talked about. It pretty much falls in the same category, but it's at its current support right now too. You can kind of see how many times it's hit this like $12, $13, $14 support right here. First time, second time, third time, and then the fourth time. So I think it's a great time to be buying between $12 and $14 a share. As you can see, I have $600 of market value at $14 average cost. We're down 2%, but that's okay because I'm looking to swing trade this thing up to at least $18, if not even higher. I think that this one, if you hold on to it for a few months, you might have to hold on to this one a little bit longer than expected or that you wanted to, but I think in the long term, this one can pay off. And even if you swing trade this one up in the short term to 16 or 18 or $20 a share, I think that's definitely very possible to do. And that can be an easy 20 to 30% gain on this stock. So I hope you guys did enjoy that quick video. Let me know if you guys like the quicker videos. I know some people like the longer ones, which I will definitely still do the longer ones. But typically what I'm doing is splitting them up. So that one video on Sunday would have been the Saturday, Sunday, and Monday video. So when I do 15 stocks, sometimes the videos are like 20, 30 minutes long, or I can separate it up into 3 or 2 different videos for you guys. So let me know what you like better. Smash a thumbs up. And if you're not subscribed and you've been watching the channel for a little bit now, just hit that subscribe button, join the family with everyone else. And if you want to be a part of my close friends list, like I said, I am closing signups. I have closed signups, but I have a wait list. So if you guys want to get on that wait list, DM me on Instagram and I'll put you on the wait list. So when I open back up, you'll be first in line. Let's have a great trading week. And let me show you guys something too if you stayed this long. This is my breakdown. I have 50K basically in my account on Robinhood. So this is an important thing to note. My equity is 34,000 of my own money. And my margin, keep in mind I'm using margin right now, which I released in an earlier video if you watched the full thing. I have $11,000 in margin on this account, and I have $3,000 just in cryptocurrency. So my Robinhood portfolio, I really have $49,514 in my Robinhood account right now. 11,000 is in margin, 3,000 is in crypto, and 34,000 is my own money, of course. So that's how we get to 37,000 as a total with 19K buying power because a lot of that is margin. You can see they gave me 30,000 in margin. I only used 11,000. I don't want to use all my margin, but I have a lot of other money. Like I have 30K on my Fidelity account. I have 25K on my Vanguard account. I have 15K on my Webull account and a few other accounts too. So I can use all the margin if I wanted to, because typically if you use margin, you don't want to be over 20 to 30% in margin. But being as I have about $120,000 to $150,000 in the stock market, $10 to $20 to $30,000 in margin is okay. So guys, that is the video. I hope you did learn something new, or I jogged your thinking, got your thinking cap on a little bit too. I'll see you guys in the next video, and remember, don't time the market, buy the market. Peace.